Good morning, everybody. It is Monday, August 1st, 5:46 a.m. Central Time as I speak here. December corn futures down 13 at 6:07. November soybeans down 23.5 at 14.45. September Chicago wheat down 14 and a quarter at 793 and a half. September Kansas City wheat down 14 and a half at 860. September spring wheat down 11 and a half at 894 and three quarters. Kind of a corrective trade here this morning following that big rally last week. If you guys are listening on the podcast, appreciate it. If you're watching on YouTube, guys, subscribe to the channel, like these videos, leave me a comment, let me know what's going on in your neighborhood, how do the crops look, that sort of thing. If you'd like some additional information from me, go to my website, www.standardgrain.com. Check out my premium subscription service today. I send my premium subscribers a ton of information direct from me every single business day. Morning email goes out about 5:30 a.m. Central. In that email, you'll see every overnight headline you need to be aware of. Lots of interesting charts, graphics, tons of weather info this time of year. My daily subscriber-only videos are part of this deal. I did a mailbag video on Friday, and in these mailbag videos, I answer multiple subscriber questions, and I do them once every 10 days or 2 weeks or whatever. One of the questions was this: Joe, I have no storage and nothing sold in regard to 2022 corn and soybeans. So I tried to answer that question or tackle that issue among a bunch of other questions. If you guys are interested in this sort of content, sign up today. $50 a month. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else, I promise. A ship carrying Ukrainian grain has left the port of Odessa. This is the very first vessel to leave the port as part of the deal that was signed on July 19th. The ship is carrying corn. It's destined for Lebanon. Ukraine's infrastructure minister wrote on Twitter, "The first grain ship since Russian aggression has left port. Thanks to the support for all of our partner countries and UN, we were able to fully implement the agreement signed in Istanbul." A Ukrainian infrastructure ministry statement said, "Unlocking the ports will provide at least $1 billion in foreign exchange revenue for the economy and an opportunity for the agricultural sector to plant next year's growing season." The ministry indicated that another 16 vessels are waiting to leave ports in greater Odessa. Now, I believe these are vessels that had been loaded prior to the invasion, and they've just been stuck there. So this is an ongoing situation. It's constantly changing. Our farmers and is the infrastructure going to hold up? Are they going to be able to move additional grain to the ports? There's still a lot of questions here. Russia actually commented on this morning. They said the news was very positive. So I guess they're going with this for the moment, but it's ongoing. It's ever changing. I have a feeling like you're going to see probably conflicting headlines kind of back and forth with this thing. But for the moment, it looks good. Is that why the markets are down this morning? I don't think so. I don't think we've been trading the Ukraine headlines like day to day since, I don't know, April or May probably. There was a period of time in, March, April, May, maybe into June a little bit where we were trading these headlines like on a daily basis. And since then, it feels like we really haven't been. The wheat market in particular has been more sideways. Corn's been trading weather and some other stuff, but certainly some positive news, I suppose, out of Ukraine. The very first ship leaving since the Russian invasion back in late February. Here's the weather here. Last 72 hours, rain's pretty sparse across the Corn Belt. A little bit of eastern Iowa, some of western Illinois caught some rain. Up in Minnesota, eastern South Dakota, eastern North Dakota, a little bit of central North Dakota caught some rain. And then a lot of rain across the south. A little bit of Kansas, say southwest Kansas, northern Oklahoma, Arkansas, southern Missouri, southeast caught rain. Radar this morning, there is a system moving across the northern third or half of Illinois. Other than that, really not a whole lot going on. The next 7 days, you've got kind of this divide in terms of who will catch rain and who won't. The dividing lines like the Mississippi River for the most part. East of the Mississippi, Illinois, Indiana, Ohio, Kentucky. Those places should see, maybe an inch of rain, maybe more in some areas. Although looking at the models, there's some conflict. The Euro model kind of indicates that the rains could be as far west as a good chunk of Iowa, where the GFS is a little bit drier. So this government map that's on my screen is probably, kind of a combination of both of them. But in any case, you've got this continuing divide between East and West. Throughout the growing season, the rains have largely favored the East, where the West has been drier. And the West started off kind of dry to begin with. So I think you're going to have yield issues, certainly in parts of, say western Iowa, maybe parts of southern Minnesota, maybe the Dakotas, maybe the Nebraska, certainly the Southern Plains. So you've got kind of a divide here. When you look at your 6 to 10, it's kind of more of the same. So I did not see any big shift in the weather forecast over the weekend. We're still looking hot and dry for the most part. Those rains in the Eastern Corn Belt were they were expecting. Those were kind of in the forecast, but 6 to 10 still, below normal precipitation, above normal temperatures. 8 to 14 day looks the same. This heat's coming in and it's going to stick around for a while. The map on my screen here is the expected maximum temperatures today. So you're going to see, mid to upper 90s in the Southern Plains, 90s into Nebraska, and this is going to get a little bit hotter here even this week. So the idea that we're going to be above normal in terms of temperatures continue. So I would say, especially in regard to soybeans, the weather is a friendly input. I know the market's lower this morning. This is a corrective deal, but the weather is still kind of threatening and could certainly shave some bushels off of these yields. You're going to start to see more estimates from private groups in terms of corn and soybean yields ahead of next week's USDA report. The next crop production report, I believe, is Friday, August 12th. Large money managers have likely been buyers of corn and soybeans recently. Friday's CFTC report revealed that large money managers bought 8,000 contracts of corn and 3,000 contracts of soybeans in the week ending July 26th, which is last Tuesday, and they probably added to them since, given that late week rally. So these net longs here, 112,000 in corn, 86,000 in soybeans, those are modest historically. Those are not extreme net longs. Funds were net sellers of about 5,000 contracts of SRW wheat in the week ending last Tuesday. That's just a modest net short. So the funds have peeled back, lengthened the row crops, but they are still long, just not to the extent that they had been. BASF will reduce ammonia production amid the Russia-Europe natural gas issue. So Russia, of course, reduced natural gas supplies via the Nord Stream pipeline to 20%, I believe it was last week, and that's a factor that has resulted in this effective energy crisis in Europe ahead of the winter months. European Union member countries are being asked to voluntarily reduce gas usage by 15%. BASF said last week that they would reduce production of some fertilizers. The company's CEO said this: ammonia is in a difficult situation. Next year's availability of fertilizer might be worse. Fertilizer prices are skyrocketing. BASF said that reduced Russian natural gas supplies were a threat to its manufacturing hub in Germany, which is the world's largest integrated chemical complex. They said if gas supplies fall significantly below 50% of the plant's max demand over a sustained period of time, they would need to halt production totally. So this does not necessarily bode well for fall and spring fertilizer prices and that sort of thing. And I have a feeling we're probably going to see some more news along these same lines, maybe sometime soon, but I'll try to stay on top of this story. July was the best month for the U.S. stock market since 2020. The S&P 500 gained 9.2% on the month. The NASDAQ was up 13%. The market was able to shrug off a bad GDP print, recession fears. Some analysts now working with the idea that the market has bottomed and that most of the bearish news has been discounted, although we've got a lot of news forthcoming. We've got earnings from some big companies. Apple and Amazon were good last week, and that's a big deal when it comes to the markets. But you've got more coming up this week, and then you've got unemployment out on Friday morning. The cattle market was marginally higher Friday, feeder cattle marginally higher. We'll see what develops here today. In the outside markets, the U.S. dollar just marginally lower. The S&P's down 9 points ahead of the cash open. The Dow down 25, pretty quiet there. Bonds off a little bit. Gold's up $7. Crude oil down $1.53 at 97.08. Have a great week, guys. I'll talk to you on Tuesday.